guys? Hope you're doing well. I'm going to be breaking down a GJ trade which I've just taken. In this breakdown, I'm going to be talking about the importance of market structure, like always, and just how to identify these types of entries. I teach them to the members as a type D entry, but obviously people look at it differently. But again, this just highlights the importance of market structure and why you should always be looking at using market structure when identifying whether you should be taking buys or sells, because again, you never want to be on the wrong side of the market. You only want to be on the right side of the market. So you either want to be in a buyer's market with the buyers, or you want to be in a seller's market with the sellers. You never want to be trading against a trend or trading against structure, that sort of thing. So let me get into breaking this down. When we got onto the charts this morning for the live stream, I was talking about how we were bullish in market structure overall. What ended up happening was yesterday we had this high created, and this was a point which created the high. We then exceeded that point, so created our new low. So this would have been the first point to break above, where we would then transition back to bullish. However, what ended up happening was we created a new low at this point over here. As you can see, we closed below that point. We got a candle close, making this our new point of transitioning back to bullish. We got a candle close above there because this is our two-legged pullback. And this is the low that was created by this two-legged pullback. So what I mean by the two-legged pullback is it needs to be two or more candles in the opposite direction of if it's a low or a high. So as you can see here, we created the low down here. So we're going to look for two bullish candles. We got that close above this level, as you can see over here. So we were only going to transition bearish below the point that created that new high. What this meant now that we were in a 4v0 bullish market bias or bullish market structure, meaning that I was only looking for buys. The whole day I have only been looking for buys, but this just confirmed that we were in an extra strong buyers market. And we had a couple of options, to be honest, to get these buy positions. We had all this clean range to trade into, but GJ was kind of choppy on the way up. It was moving up, but more of a shuffle than like a push. It was just slowly moving a little bit bullish. So what I was waiting for was for us to create a high, come back down to a previous level of support, and then retest the high, so continue bullish. It's just a really easy way to get the most optimal entries in an uptrending market, is buying at support in an uptrending market. So you can't buy at support in a downtrending market because there's a good chance that you'll break through that support. But if you're in a bullish market, buying at support makes a lot of sense. And what that often entails is letting price create a new high and then waiting for it to come down, retest the previous level of support or resistance, and then retest that high. So that's basically exactly what happened. I'll let it play out and show you. You see this was kind of our shuffle upwards. Now we got to this previous level of support and we started rejecting it. You'll see here we started the strong bearish push, and we came down to this previous level of support as well. Now, being in this bullish market, when we come to a level of support and start rejecting it, that's when we can start thinking of retesting the highs. We did come down and create this pullback in clean candles, meaning that there's a good chance of getting back up there rather easily without having to consolidate or choppy price action or anything like that. So now what I was waiting for was support to form on the 30-minute time frame. 1 hour 30-minute, but 30 minutes is a strong enough confirmation time frame, so I was waiting for support to form on that. So as you can see, that's exactly what ended up happening. Another confluence which we had added to this was we respected the low of the previous candle. So when that happens, what it tells us is that seller's pressure is dying out and the buyer's pressure is back in the market. So we respected the low of the previous candle, and we formed this strong bullish support, because as you can see, this candle's strength is quite a strong candle. You can obviously judge that by the candle size and the strength of the body of the candle. We had created this high over here, which again is exactly what I was looking for. I was looking to create the high, come back down to a previous level of support, which is what we did, and then form that support at that previous level of support. Now we're in the uptrending market. What you want to see now is on the minor time frame some resistance. So that'll be like some 15 or 5-minute resistance, and then a break of that resistance on the next 30-minute candle. And then our entry is going to be at the break of that resistance to retest the highs and maybe create new highs. So what we need to do now is obviously identify that within this candle, there's 5-minute resistance, because although we've formed our support, we want to break through some minor resistance to ensure that we're going to continue, because by not respecting that minor resistance, it means there's a good chance we're going to continue bullish. So let's drop down to the 5-minute time frame to see if we can identify some minor 5-minute resistance. And as you can see, within that candle, we have 5-minute resistance. This was our latest 30-minute candle, which I just printed, and within it, you can see that minor resistance. So what you would do now is mark the top of that 30-minute candle, which would be represented by obviously all of these candles, and then we can drop back, or we can go back up to the 30-minute time frame. And what we're basically looking for now is a wick down on the new candle, the new 30-minute candle, and then a break of the high, and then to get to this point here at least, so retest the previous points of resistance, and then hopefully create new highs. My position looks something like this. I'll obviously put it up on the screen for you guys, but I had a buy stop set about a pip above this point over here, and then my final TP was obviously a little bit higher. My stop loss was going to be determined by the new 30-minute candle, because I wanted to see it wick down. My stop loss was going to be placed below that candle wick, so below the current 30-minute candle. And then my first point in securing some profits was at this point over here, because I was obviously wary that this is a level of resistance, a 30 level resistance level, and you have to take that into consideration. So the trading range wasn't great over here. There was only about 11 pips worth of trading range, but the idea behind the trade was we are in such a strong bullish market, and what we are looking to do is just break through this resistance level and create new highs. That was the idea behind it. So if we let this play on, you can see that the next 30-minute candle did exactly what we wanted to do. It wicked down, giving us our stop loss. So the stop loss was at about 8 pips. And then it triggered our entry, which was about a pip above the high of the previous 30-minute candle. It also respected the previous 30-minute candle low. Again, these are candle formation signs which you need to look out for, you need to be aware of. And we came straight to our first area where we were going to secure some profits, which was about plus 11 pips or so. Once we hit this area, I moved my stop loss to break even and let the trade run from there. So what this trade shows us and tells us is the importance of market structure. Once again, we were in such a strong bullish market that we didn't want to take sells at all. I didn't want to take sells at all. We had these possible counter trend sells which happened over here down to this previous level of support, but those didn't interest me. All I was looking for was a possible area to take buys again, and where that's going to come in an uptrending market. If you want to get it at the best possible prices, it's at previous levels of support once we have already created a high. So again, it's quite easy to just want to take trades based on how candles form and candle formations, but without the understanding of structure and without establishing a bias, you can often find yourself on the wrong side of the market. So yeah, this is just a video to show the importance of structure again. A nice little post-trade analysis of the GJ buy from a little bit earlier today. It was just after New York market open, and yeah, very happy with how it played out. And yeah, thank you for watching, guys. Please do remember to leave a like and subscribe if you haven't subscribed. And I stream every weekday from 7:30 GMT, and yeah, I do appreciate everyone watching, so thank you very much.